Today is May 31st and welcome back to MegaTrade 101 video presentation on the foreign exchange market. Eventually, we're at the crossroads between the dollars undergoing a corrective phase, as currently we could show here that prices at the 83.05 level is working at the lower trend line support, where a 50% Fibonacci retracement has been established here with an indicator of a red line from a high at 84.96, 97 on this level, where the prices on the daily here was established at 84.36 as indicated on the information data located on the left hand side of your screen. But as a matter of a recap, from that consolidation period from April to the first week of May, before the breakout at the 83.05 level, here the opening price levels of the dollar has been opening with a price gap and continued higher to that particular high of 84.49 at this level. However, as you could see here, that the two configurations of a two dark cloud formation have given a negative signal for the US dollar to move lower after a string of good reports in general as far as US economic indicators are concerned. And currently, with this corrective phase back to the price level here at a 50% Fibonacci level at 82.95 has been touched, and the driving force for the dollar to move and continue higher within that same channel may still be strong depending on the volumes and the outcome of momentum gathered throughout the next consecutive weeks to follow. And as you could see here on the 8-hourly chart, where we have indicated that it is working at the lower band of the trend line support that we have drawn in parallel with the previous top trend line that served as a resistance. However, this represents the two dark cloud formations and dropped to a low here, and for that reason, that uncertainty with regards to the Fed's tapering off with their QE monetary policy have made this decline a little more dramatic than normal. Although 50% of the Fibonacci retracement level is quite normal for the market to react where uncertainty prevails. Now, we also made a comparison where we speculated on the euro-pound cross rates, more of a long, where it broke out of its levels here in comparison with the Dow Jones-FXCM USDOLLAR index, which is on your right hand side, and the euro-pound cross rate on your left hand side, which is shown here or reflected as a line graph as compared to a Japanese candlestick here, where it is currently working at the 10,751 support level, where the 10,740 is a critical price, although measured same thing with the US dollar. The Dow Jones-FXCM US dollar is still within a rising channel at this time. Obviously, the two dark cloud formations are reflected here as well, although this is more in relation with the Dow, and also as far as the line chart for the euro-pound cross rate, you could see that there is actually also a selling divergence, which we also explained in our previous articles and market view analysis, that contradicting tops relative strength index as a combined tool to show some indications of how the next market movement would be making, is one of the best tools as we combined, although here we also combined a Fibonacci fan formation on the rising fan outlook that we made, where the possibility for a drop to the previous low, let's see if we can get it here, of this particular 10,715 price level, although the low here that was established currently was at 10,733, which is not too far off from the more important psychological price level support of 10,740 on the US dollar FXCM dollar index. Compared with the stochastics combined with the relative strength index, the widening gap between the RSI and the stochastics would eventually converge within that rising channel, indicating that any particular down movement is simply a temporary correction, although it may be large as far as point value is concerned, although the strength of the euro compared with the euro pound in itself has gained more relative to the pound's movement or cable's movement from last night. Let me show you exactly what we mean. What we have here is the euro dollar daily chart, where we will have to adjust a little so it will not be too over dramatic as far as price movement is concerned relatively, because here you could see that the same resembling bar formation of the opposite bullish, instead of a dark cloud, it's a morning cloud formation where an engulfing bar has preceded over the previous decline, so as with this indicating that buyers have indeed become more aggressive, where momentum have increased on this level during the 28th of May, comparing it with the, let's see if we can get this one here, with the pound as well. Let's adjust the increments here, making it more of a double bottom formation, penetrating the previous moving average on the 29th when it accelerated, and this is because of where the US dollar moved lower. However, comparing that, we used to have a second long position here, although at this present time we have decided to keep our first position at the levels of 0.8440 level, where prices have moved higher in conjunction with the movement of the euro in itself from a low of, let's see if we can get it, 1.2836 at these levels. Okay, and currently working at the high right now at 1.3060. Whether the pound would hold steady and the continuation of the euro would move higher compared with the US dollar. At this note, we could see that the 3 consecutive high price of the euro pound cross rate at 0.8597 has become the resistance or the primary resistance level, where when you extend a double top here, that's why every time the prices move up, okay, meets that particular high of 0.8596, profit taking takes place, short covering takes place. That's why pullbacks on a daily or on a session to session basis is possible. However, as long as the prices still moves above the 0.8564 level, and once it does penetrate, which we anticipate, depending now on a continuing US dollar decline, the euro pound cross rate will continue to move higher. And reflecting on the weekly basis, this chart simply indicates a triangle formation here that broke higher on the resistance on the first initial try, as we have shown you on the daily basis here, which broke on the May 21st. Of course, this is due to the most of the market squeeze between the rally and the decline of the US dollar, which proved to be more of a buyer's market before the decline of the US dollar. And this continuation here also supports an ascending triangle, a smaller ascending triangle compared to the weekly, where at least at now the price of 0.8562 is being held at bay and waiting for some fresh incentives to move higher. Although, like we have made mention, that it is still within a rising channel where this trend line supports the uptrend and the rally of the euro cross rate, euro pound cross rate, as this has been a reinforced trend ever since it had started way back in January 6th, 2013. And this hasn't stopped for now, as the reinforced trend is being fueled by a short decline on the US dollar. However, we will find out whether this push would be until the end of this month, which is almost there, and a follow through for the first week of the new month by June. So as far as the technicals are concerned, when prices do move slightly higher to this price level, although we're looking at a possible high higher than 86.35 initially, although there may be once you project the relative strength index at that price level, there may be a corresponding pressure on a short selling divergence that would be created as far as the technical is concerned. However, that particular movement will still be the target, where it would be on a channel formation downwards in the medium term outlook. But for now, we remain positive, and hopefully that this analysis and support for the outlook for the euro pound as well as the US dollar index would provide some insights to your trading. Thank you very much and have a pleasant day.